Hey everybody, welcome to the Independent Investor channel. My name is Ryan. If you have ever wondered where do you start in the investing world, we can answer some of those questions for you. If you've ever wondered whether or not the investment account that you're involved with now is the right one for you, take a few moments and watch this presentation, and may generate a few questions for you to ask, and make sure that you're confident in the investment plan that you've got for you and your family going forward, making sure that you're getting all the tax shelter benefits available in the marketplace for you, making sure that you're preserving the wealth that you're accumulating over the years, and making sure that the wealth that you're contributing to is not being lost through strangleholds on accounts via hidden fees, things of that nature. The goal on this program is to talk about really simple investing strategies that can help even the beginning investor or the most advanced investor make sure that they pick and choose what it is that is going to be best for their financial portfolio. In my last video, I talked about the brokerage account, okay? And 90% of investors out there end up going with a managed program, okay? A lot of people do it for a lot of different reasons. I deal with people all the time looking to take financial advice, and a lot of people want to know about the market, okay? I would say the vast majority, if not everybody, has a general interest in the investing or saving for the future, or saving for their kids' college education. And I would say that most people actually do invest, okay? I would say that most people actually take that leap of faith. They actually set up an allotment from their paycheck, and they actually take that, which is a scary step for most people, and they start to contribute. Now, for the people who invest most of those people actually are involved with a broker managed account, okay? And what I have found is that very few people actually invest correctly. And what I mean by that is investing correctly doesn't necessarily mean that because you don't have time for your investment situation, or you don't have any time to where you think if you sit down with a financial planner that they're going to somehow return you magical results, okay? And furthermore, you think that because you might not have what you perceive to be a necessary level of education in the market, that we justify these things to basically just putting it off onto somebody else and letting somebody else put you on a program, okay? That can be one of the biggest mistakes that you can ever make in your investing career. And everybody has different needs. You watch investing shows all the time, and you watch things that come up on the internet about everything that's worked for everybody else, and those things don't necessarily or may not necessarily fit for you. And so what I try to deliver on my particular videos are concepts that can really help anybody, okay? And some of the concepts that even I mention, I would expect that you would ask and raise an eyebrow and say, is what he's saying true? Does that exist, right? What are the fees that are associated with brokerage house? Am I paying those fees? Those are all fair questions, and quite frankly, it's your money. And if you're choosing not to ask those questions and not to get to those hard answers that you're deserving of, then I think you're probably missing out on a lot of returns as those accounts grow over time. So what we're going to talk about in this particular video is the benefits of the self-managed account. And I believe that this account is one of the best things that a new investor can be involved with. You can do all kinds of different things. You can make all kinds of mistakes. But if you do this one thing correctly, you are going to look back over your life and you will remember the time that you started your self-managed Roth IRA, okay? Now, the benefits of the self-managed Roth IRA is that you can purchase any product within that account, okay? You can purchase ETFs, you can purchase stock accounts, you can buy bonds, mutual funds, if it suits your fancy. Anything within that account to allow you to diversify as you start your portfolio. And there is no better way of diversifying a portfolio when you're starting a foundational investment account. Okay, we think about it like a pyramid or building a house. Okay, we have to start the foundation first. And the best foundational account that you can possibly get into to expose yourself to the market but not expose yourself to the single stock risk is to go ahead and purchase an ETF product. Now the ETF is an exchange traded fund, and that allows you to buy the broader index. Okay, so you have the Dow Jones Industrial, we've all heard of the NASDAQ, the S&P, the Russell, and so on. And the ETF product allows you to purchase that broader asset and spread you out over every stock that represents that particular index. Okay, and I will get in depth a lot more on how to actually structure your accounts in my follow-on videos. But for starters, I really just want to point out that in my last video I talked about financial planners will sit down and they'll usually try to channel proprietary stocks towards you, whatever stocks they represent within their brokerage house. In a self-managed account, you don't have to do that at all. If your criteria is that you only want to buy 5-star Morningstar rated funds, then you can do that. Okay, you don't have to settle for anything less than the highest rated funds. Okay, and you can pick between many different companies, whether it be Schwab or Vanguard. You could choose, whatever account that you want, and you have those comparisons on those account websites to allow you to choose the best product that's good for you in your foundational building when you're just starting out. Okay, of course you can buy stocks, and that's one of the very biggest benefits. Now, a few things with stocks. Honestly, we need to be an investor first, and then we be a trader second. Okay, you can also be an investor first and a stock investor second. Okay, so you can't do one without doing the other first. What I mean is you should be looking to get that first diversified portfolio built anywhere between $5,000 to $10,000, and you'll get there. You'll get there quick, and then we can look to maybe add a couple of diversified pieces to that portfolio as we look to build those accounts out, okay, and build a real strong portfolio. But the benefit of this account is even if you do start it, that capability is in there for you to purchase these assets. And the fees on these stock buys are going to run you anywhere from $4.95 to $7.95, okay, per trade. And as I talked about on my previous video, a brokerage house is going to charge around $50 for an entry fee and an exit fee. Okay, so these are some of the things that you want to keep in mind. Now you might be saying, okay, well, I don't need to ever buy stocks, so this doesn't apply to me. Okay, well, it may apply to you now, but what if it applies to you later? Okay, and what if you get a dip in the market, and what if you could have been ready to maybe add an Apple to your portfolio and maybe add a Kraft Foods to your portfolio, and you didn't have the capability to do that, or you kept the status quo and kept along your normal program, and now $50 is more of a disincentive to you to actually start to broaden your portfolio and enter into stock investing. That would be really unfortunate because you're actually really missing out on far greater returns, right, that you could foreseeably get in potentially an ETF. Now, of course, you do take on more risk, but certainly I do encourage stock ownership, especially the younger that you are. You need to have stock ownership in that portfolio as we build the foundation. It's the next layer up, okay, to add some well-diversified stocks within that single account, okay? But the cost of acquiring these stocks is insurmountable, and the benefit to owning those stocks at such a low cost and actually going in there and buying those stocks when you want to buy those stocks and you get to monitor those, right, leads me to, another enormous benefit to the self-managed account is that when you add these stocks to your accounts, these stocks are going to pay you dividends most of the time 4 times per year. They're going to pay you an annual percentage just to own the name, okay? And you can take that money, and the younger you are, I still do it, all right? is take those dividends and repurchase stock with them. So basically you're keeping that, rebuying stock, and you're not doing anything other than just owning the name. All right, in my previous video, the broker managed account, they will charge you for that functionality. In the self-managed Roth IRA, it's a drop-down menu, and you click dividend reinvestment, and you're done. And I'm pretty sure you're not going to charge yourself for that function either. All right. So the last thing and the biggest benefit to the self-managed Roth IRA, I mentioned on my previous video that if you go with a brokerage house like 90% of people do, okay, they need to realize that the biggest takeaway from that is that over time, the fees will end up impacting that account in such a manner that the investor from start to finish could actually only realize back for themselves at the time of maturity 40% of their original investment that they've put in. Guys, that is a tragedy, all right? And if you don't believe me, please go on. I encourage you. I've left the link on some of my videos for the cost comparison analysis. And if at the very least, you look at what the cost it costs to own your account is compared to the benefits of owning a self-managed Roth IRA, all right, that has absolutely no fees in this account whatsoever, which allows your money to grow tax sheltered, same as the other account, all right, but we're able to preserve the wealth that's being paid to you every single year, every single day, as those assets accumulate in value and they grow and they get larger, right? Nobody is reaping the benefits of that capital appreciation. Nobody is realizing the benefit back on that account except you. That's it. You're not sharing with anybody. And quite frankly, it has nothing to do with greed, all right? But I find that the one common thread for most people is just that they're somewhat naive on asking the right questions, scary questions, and expecting scary answers back with regard to the program that they're in. I asked them for myself. I received those scary answers back, and I chose to act upon that data that I received because, you know, the mathematics of it just don't equate. If I'm 50, 60, 70 years old someday, I want to look back over my career and say, you know what, I kept 100% of my wealth that I've accumulated over my life because I've worked hard, right? I didn't need to share it with anybody, okay? And the last thing in parting, when we're looking at the self-managed Roth IRA, this gives you all the freedom to do what it is that you need to do to meet my main goals. Number one is tax shelter. You have to put your money into a vehicle that is tax sheltered, that can grow over time and have allow contributions and earnings to grow over time to be eligible withdraw at some point down the line when you look to retire, okay? You have to be tax sheltered, okay? But being tax sheltered is only the first thing. You cannot meet goal number 2, which is wealth preservation, if you have tax shelter, right, and you're trying to preserve that wealth in there, if you're being strangled with fees that are assessed on that account, okay? So please ask those questions. Please look at your current investments. Please stay tuned to follow on videos. I will be coming out with a sequence, a chronicle of videos, getting in depth on all these topics, getting a lot more into actually building this account and what it could look like for single people, for married couples, for young people, okay? Because again, you know, there is no single investment strategy that works for everybody, okay? But there are common themes, and this is somebody that everybody should look at and be aware of. Please like, share, or subscribe at the bottom of this video. If you'd be so kind as to leave a comment on the bottom of the video, I read through those comments, and I'm going to take topics. Please recommend topics that I can look at and build a quick 10-15 minute presentation on. Hopefully you have enjoyed the video, and again, this is all about making one empowered investor, one investor at a time. Thank you so much, and good luck with your investment future.